Thank you for watching Resource Talks and welcome to the Precious Metals Summit here in Beaver Creek, Colorado, where I'm combating sleep deprivation and jet lag with a very specific diet consisting specifically of caffeine and protein bars. I think I'm going to need it though because I'm here to ask junior mining companies how they plan on not wasting any shareholder capital during this bull market, which, as you can imagine, is not going to be everyone's favorite topic. Luckily though, I don't care about what their favorite topic is or isn't. I care about spending shareholder capital efficiently. And bull markets are notoriously the perfect breeding ground for inefficiencies. So what should they be spending their capital on? Is it more marketing? Is it more drilling? Is it better dinners with strategics to get those bigger bucks in? Lobbying with the government? Higher salaries for management to attract better talent? I don't know, but I've got 4 days and I think over 40 meetings booked, and I'm hoping I'm going to be able to figure it out. Hopefully I'll get some of them to get in front of the camera with me and talk to me about that. And of course, as always, taking you along for the ride with me. But before any of that though, please pause the screen right now and read the disclaimers that are going to be shown on there, because your capital is at risk. This is venture capital and nothing is guaranteed. In addition, consider me having a conflict of interest with all of the companies interviewed herein because I either own shares or I have a relationship with the management. It's either going to be a business relationship or a personal, or sometimes both. So take the time and read those warnings. So my first meeting is in about 5 minutes. It's with Relevant Gold Corp. They are a $6 million market cap Explorer Co. based in the state of Wyoming. Actually not too far away from here. Just a couple of hours drive, I believe. Yeah, 36 million market cap. They recently raised just under 10 million bucks, I believe. And they've also been getting some government money on top of that as well. So it seems like money is not an issue for now, but is spending it going to be the real challenge? Hopefully we'll figure out. All right, Rob, just kicking the door in immediately. What do you think is the best way to spend shareholder capital during a bull market? What is it that you should be buying off the most, I guess?
Sure. Well, I think the probably common answer you're going to get, an obvious answer, is drilling, right? Drilling moves the needle. But what I would say is most important in a group like us that focuses on execution is our team. In a bull market, you have a unique opportunity to build your team, to pay them the right wages, to attract the right talent. And that's one of the most powerful things you can have to be able to execute appropriately and protect shareholder capital through proper execution.
What do you think that ratio should be then? Let's call it G&A to drilling. I call it the exploration to administration ratio. How much money should be going into the ground versus, again, incentivizing your team?
Sure. Well, I think the team incentives come from, it goes up congruently with the scale of the drilling. So, for example, we're drilling 5,000 meters this year. We're hoping to ramp up to 20,000 meters in 2026 as we continue to ramp up across the portfolio. With that, you need to grow the team congruently. So the ratio doesn't change much, and our ratio is typically 65 to 75% goes into the ground almost every year. If you look at our financials, we average about 12 to 17.5% in G&A costs over the last 5 years since the inception of the company. And when you talk about protecting shareholder capital, that's something we're actually really proud of as the largest shareholders ourselves, co-founder and chief exploration officer Brian Lentz and I. We look at preservation of capital as preserving our own capital and getting everything we can out of it. So, for example, in the 5 years that the company's been around, we've raised about 23.8 million Canadian dollars. We've raised that money at a 1% cost of capital. Total finder's fees, warrants, and cash is $249,000 on that money. That's really unheard of. And that's your G&A doing work for you as a shareholder. And then if you look at the way we've spent that money, it has been in the ground. And that's, even in the down market, allowed us to go from inception to a $40 million market cap on $23 million in what was maybe one of the worst cycles we've seen in a long time. So we're really excited about where we're sitting today because of that good management of capital for the last 5 years and putting us on what we think is a springboard going into a bull cycle.
Do you think you have to spend more money on marketing during a bull market because there's more active companies and so on and so forth. There's just more noise, and so in order for you to stand out, do you spend more, or how do you do that?
Yes, I think we would spend more because, as you know, our marketing budgets are very thin in general. We typically try to get a lot of organic coverage and a lot of organic traction in the markets, but I think as you go into a bull cycle, there is more money coming in, so there's more ability for other groups to put that kind of fuel on the marketing fire. So you still have to stand out in the crowd, you still have to do that, but we like to do that by data. We like to let the results do that. Chris, who's our marketing guru, who you know well, he always says the rocks and the data are the best form of marketing, right? And so we really look to put that money into the ground and market off the backs of quality results. And that's really what we've done so far. And as the bull cycle ramps up and more money is available, sure, we would certainly be ramping up the marketing congruent with the ramp up and growth of our business.
Is lobbying going to be part of your spend as well? Because it seems like governments around the world, and definitely in the US, are waking up to the fact that we need more mining and they need to incentivize that. But you also have to make sure that you're there to receive that money and they know of you. So is that something you're going to spend money on, or is it just effort?
Well, we already are receiving that money and haven't spent any money on lobbying. So we're operating in Wyoming. It's recently, in the last Fraser Institute publication, moved to the #4 mining jurisdiction globally. That's a pretty incredible feat. I believe the year before it was 28. That's a huge jump. And that's evidenced by the support and the streamlined permitting that we're seeing with regulators there and the support we're getting from the government. We just received a $226,000 US dollar grant from the state of Wyoming with their energy matching funds, specifically going after our Apex target and our Bradley Peak project. So we'll be flying an airborne VTEM survey over the Bradley Peak project, and half of that will be covered by the state of Wyoming through one of these grant programs. So I would argue that the lobbying is a component of the industry for sure, but where we're at and we're operating, we have good fortune of not feeling a huge need to necessarily deploy a lot of capital in that direction, because we're already operating in one of the best jurisdictions where that money's flowing in effortlessly now. So I think that's kind of the reality for our playbook. Because of our depth in the industry, we also have a lot of unique connections in the U.S. Regulatory space, right? We've had a consulting firm for 15 years that has worked for the biggest mining companies on earth, and that's really given us exposure and access to a lot of the government officials, meeting with the different policymakers on a regular basis. Our consulting firm has actually helped to guide Congress in the past, and our chief geologist has been on C-SPAN to testify in front of Congress about strategic and critical minerals. So I think that there's more to it in the U.S. than just hiring a lobbyist and going the lobbying route. I think that's a tool in the toolkit when you think about government affairs. But I think relationships is really where it's at, and those come over long-term fostering of those critical relationships, and that's what we've done.
You're breaking my dreams. I was hoping to become a lobbyist in the U.S. was my plan.
Oh, I think you'd do great. Yeah, they would love that, you know.
How much money do you have right now? I think you recently raised, $10 million. How much do you have left in Katy right now? How far is that going to get you?
Yeah, so we raised 8.5, and that was in a pretty incredible financing. We were at a 20% premium to market with no warrant, and this was really before things started to turn, and we were able to upsize that twice and close that $8.5 million. We've got about $5.5 million in the bank. We've been actively drilling our 5,000 meter program at Apex, as well as doing our exploration work, so we're in a very comfortable cash position. We're just about to wrap up the drilling in the next month or so, and we'll have results imminent. So going into kind of the turn of the year with a strong treasury and a lot of catalysts upcoming.
So when do you think you're going to have to raise again then sometime next year, or is it something that you think maybe comes this year?
Well, I think we're, as we always are, we're flexible. We like to raise money when we don't need it, but we also want to raise it at the most aggressive share price we can get. So with upcoming catalysts, we obviously would be waiting for those results to come out, and then from there it'll be kind of market derived. Because we have a good cash runway, as well as some warrants coming in the future that are due, and we expect hopefully that those will get executed. We really see kind of a long runway for our current cash trajectory, managing our burn. Our base burn is only about $100,000 a month. So we try to keep that pretty low so that we can be methodical in how we finance, when we finance, so that we can do it in the best way for our existing shareholders and new shareholders coming in.
All right, so I've got about 20 minutes between now and my next meeting, just enough time to shake a couple of hands and down a bucket of coffee or something, or maybe a couple of buckets. I'll see. And after that, I'm going to be meeting with Kieran Patanker of Maple Gold Mines. They're a 50 $55 million gold explorco/developer with assets in Quebec's Abitibi Greenstone Belt, recently raised about $5 million, including some money from Michael Gentile. So that's an interesting angle that we might touch upon. But also $5 million, not all that much money relative to the size of the project there. So they're going to have to be efficient with it. And hopefully I'm going to figure out how they plan on doing that. All right, Karen, what is it that you just raised some money, $5 million, relative to the market cap and the size of the project? Not an incredible amount of money, but not nothing either. So you got to be efficient with it. What is it that you're going to be spending that money on in order to generate shareholder value?
Well, we did announce, and we're closing a $5 million financing today. So we do always focus on value enhancing exploration and development with our projects. The plan with this $5 million is to do focused exploration as we have been doing, following up on success that we had in our winter program at Douay. We've got targeted exploration 5,000 meters in the Nika zone, where we had a great success, hole 338, which was one of the best intercepts ever drilled, down plunge extensions, high grade, and similar down plunge step out success at 531. So 5,000 meters there this fall, as well as a maiden program at Joutel, which is a past producing high grade gold mine complex that was, shut down in 1993 at far lower gold prices than where we are today. So we think with the combination of those two drilling activities, plus we've got a forthcoming mineral resource update and an internal scoping study and engineering trade-off study, which is really going to get us, a little bit of the bang for the buck here on two fronts with exploration plus focused development, I think is what's really going to create value for shareholders over the next couple of months.
What percentage of your money is going to go toward that versus the rest, which is running the company, marketing the company, making sure that you're keeping strategics happy and potentially talking to others or not? What percentage of that, what's that split going to be?
Well, I'll take it a little bit reverse. Strategics are very happy. We had Agnico participate in the last financing round, and we've got a great partnership there. I think your audience knows that. In terms of how we split the money, we raised $3.5 million worth of flow through. We also raised $1.5 million worth of hard dollar. I set out as a goal with this company 2 years ago when I took over. Obviously, we've completed the reset of the company now, but we've kept the G&A at or around $2 million a year, $150,000 to $175,000 per month. I don't anticipate expanding that because, again, I think we've optimized how we spend money as a company. We're at or near the low of what it takes to be a public company in Canada. Obviously, the shares have been outperforming. I think we've got a lot coming. So I think the majority of what we raise plus what we have in the till, we've got about $8 million all told with this completed financing. The majority of that is going to be going into the ground. I would say at least this fall, it's going to be $5 million minimum.
Being at or near the low in terms of G&A, which includes your marketing as well, is that the right spot to be during a bull market, though? What I mean by that is everyone's going to be trying to be loud, right? And so the amount of noise in the market is going to be, the average is going to be higher than normal. So in order for you to stand out, how do you stand out? How much money do you spend on marketing, and how do you manage that spend?
One of the ways I think we really stand out is when everybody else is being loud. Maple has a history of also being loud, not necessarily just in a bull market. We underpromise, we overdeliver, right? We consistently execute, as we've done for the last 2 years since I've taken over as CEO. We continue to spend minimum amounts as needed on marketing. Obviously, we're here at Beaver Creek. We've got a full schedule. We're presenting here. We don't push water uphill when the markets aren't there. We're not spending money on unnecessarily on marketing and roadshows and things like that when we have no news to share with the market. But in this case, we've completed a major reset of the company. We have been talking about that for the last 2 years, but this last announced transaction with the financing, with the rollback, which we just completed yesterday, with new, the board refresh with some great board members joining us, and a lot of catalysts coming up. It's a perfect time for us to be out talking to the market. That said, we don't anticipate dramatically improving or increasing our marketing budget because we are getting very effective marketing where we are, and that's evidenced not only in the inbounds that we've had from investors on the news flow that we've had. We've got people in the seat paying attention, but certainly the share price has been performing. So, we want to see that continue. We like the slow, steady march upward as opposed to the hockey stick type spike. And I think, the targeted investors that we have are really, we've got this great network of long, strategic, high net worth and institutional shareholders that we're building. So the retail is certainly someone that we focus on, but it's really for trading back and forth. I think as we build a long-term business, marketing is going to be a big part of that, but it's not really going to be a massive part of the budget relative to focused exploration and development.
The other part of your G&A is paying salaries to management and staff. As everyone is going to start making more and more money with a bull market, as it typically happens, are you going to have to increase management and staff salaries in order to keep everyone happy and incentivized enough?
I certainly hope not. I came in here with a mandate to really bring in and rein in waste, and we've got a smaller, leaner, meaner team. We've got a focused team. They bought into the vision that I've articulated. So people they benefit from exposure to other things, like as the share price appreciates. We have share-based compensation and incentive compensation, things like that. There are smart ways for us to make sure that our team is properly incentivized to drive shareholder value and aligns with shareholder interest. I'm certainly one of the largest, if not the largest, shareholder on the insider group besides Agnico, and I want to see our money spent in the right way. We obviously need to retain the great staff that we have and attract new talent, but I don't see massive blowouts in terms of our G&A and our salaries because we do have a very focused and dedicated team who's doing great work.
What about your personal salary and KPIs and bonuses and stuff like that? Are you going to make more money if the company does better?
Preferably, and I think shareholders, this should be music to their ears, I make more money when the share price performs. And that's because I have direct exposure via my share ownership position and equity and options and things like that. In terms of the salary, I wouldn't expect that to be, dramatically increased. We did do a whole exercise, where we've actually instilled as well better KPIs, better corporate governance practices, benchmarking, compensation, et cetera, encourage people to take a look at where we stand vis-a-vis our peers. But one of the things that we look at when it comes to CEO compensation, as with all of our C-suite and other people within the company, is we can always reward outperformance via bonuses, right? And at the end of the day, that's ultimately at the discretion of the board, the independent directors, the compensation committee. But we've got a highly functioning, very aligned group that's focused on the corporate governance aspects of the company and aligning compensation practices with peers, but also with the alignment and advancement of shareholder interests.
All right, so I'm just rushing here from door to door. I've got about 10 minutes between this and my next meeting where I'm talking to John Mark Stouty of Riverside Resources. They're a $13.5 million explorer / prospect generator / royalty generator, and they've historically not had to tap into the market all that often. They still have a couple of $1 million in cash that I remember from my last conversation with John Mark. So it'll be interesting to see if they're going to change that strategy for this bull market, and let's go and see what they're going to be spending that money on. All right, John Mark, I want to talk to you about spending shareholder capital during bull markets. And maybe just briefly to start off, what is it that you're going to be spending it on? What do you think is the most efficient way to deploy shareholder capital during bull markets?
Bull markets for us are the best times because we can get other people's money to spend on the assets that we have. So you say, what are we doing with shareholder capital? We have the same amount of capital this year that we had last year. We have not had to finance in over 7 years as Riverside, since pre-COVID. So what are we doing right now is lots of deals. People are coming to us for assets. People are coming to us for technical team. One of the things in a bull market is you don't have skilled people. We have those skilled people in Riverside. So with Riverside, with our business model, we love bull markets because other people, the projects can move. So we're sprinting. So we're working every day as a Monday, progressing multiple projects, and we really love these times because it's when the projects themselves can be transformed for the communities, for the society, and for the assets that we continue to own.
What do you do on Sundays, though?
Sunday is a great day. It's a religious day. Sunday is the morning, basically from 5 to 6 in the morning every day. That's the time for myself, for my family, and particularly for creating what's next. And it's a lot of fun.
What is it that you're going to be doing with your own money, though, when you're not looking for deals? Like when you have to go out there and market or something like that. What is it? I think you have $4 million right now or something like that. What is that money going to be spent on?
So we're consistent. We have spent 1/7 of our budget during good and bad times. So we're not spending a lot more money. We're not trying to compete. We're not really trying to market. We're always about assets, getting assets so we have capital. So we're making decisions. Now, when the capital is easy and when people can get it, we can still get our projects and we continue to acquire those projects and complete them. So maybe we acquire a few less projects in the short term when people are buying projects, but we do due diligence. So what we're definitely spending on is meeting with people to get deals done. What we're also doing is completing the option agreements. We're different than most other companies. When we option a property, we have more than 50% of the time completed that option to actually earn into it. Yeah. So we've looked at it instead as a staged purchase, not really an option in the sense of the overall, generally people option a property with a very low probability of completing that option. So with our capital, we continue to make those staged payments, which are very limited, and keeping the properties in good standing, ready to do the next deal. And getting drill permits. Getting those drill permits makes it turnkey. So we love this conference because at this conference, we have people coming looking to deploy capital, and we can deploy it with a drill permitted project. That's unique, and that's what Riverside has done, and that's what Riverside has as a portfolio.
Last time you and I spoke, I asked you what the most fair criticism has been of Riverside, and you said that some people are saying it's too boring, is what you called it at the time. Is that something you plan on changing during the bull market? Like, are you going to go and I don't know, do 2 capital raises within 12 months? And are you going to change your capital market strategy essentially?
So our capital market strategy is getting deals out the door, and particularly one of the things we can do is get the next deal out the door. Secondly, getting Blue Jay financed very well. So does that really help Riverside? Yes, because those people that have survived the boringness of Riverside are owning. And now when those things go up, Capitan Silver, I've had already 9 people come and say, hey, congratulations. That was something that took us 5 years to be here today as a 10-bagger. And so our shareholders are doing great, and I'm delighted to be involved in that. And I think during right now with this time, we are not raising money. No, we actually have the capital, and capital is flowing to us. But yes, we're definitely able to make it less boring by making announcements about fast getting steps done. So it's not boring now, even with Riverside, because we have people coming, be able to launch new businesses out of Riverside right now. So it's a great time to own and participate in the upside.
John and Mark, you and I have talked about this before, but finding talent and retaining them is a big part of your business strategy as well. Is that something you're going to spend more money on now that it's a bull market, and it's probably getting harder and harder because they might be getting better offers someplace else? So are you going to spend more money on staff?
So what we do is we definitely give people bonuses about results, and we definitely are glad when we actually get OPM, other people's money, into Riverside, that they actually get part of the participation. Secondly, we do education. So I don't know other people, we brought our technical team from Mexico up, and they got to do a week-long course at the University of British Columbia. We're actually doing a lot of courses and education for our staff. So we're very different in that we're not simply paying money, we're giving opportunities of learning. We're giving opportunities of other jurisdictions, letting them come and work in different places, something they don't get in other companies. Other companies offer a single project, a single place. The people that have left Riverside, many of them have come back and said, I wish or I'd like to come back, or I like working with Riverside, because the diversity of opportunity, education, knowledge is golden, learning and having a chance to be more involved, more than just one project.
What about marketing? Even noticeable here, I mean, there's noticeably more people here than they were here last year, if I remember correctly. So are you going to have to spend more money so that you're louder than the majority in terms of marketing?
I don't think we can out-scream other people. I'd rather have out-quality the people. And so people that are looking for quality, we're here, we're solid. We've been going 18 years. We only have 75 million shares out. So when there's all the noise and everything, let people come back home to the quality. When that happens, when the tide goes back out, we'll have our swimsuits on or even our wetsuit on, and we'll be in a good position. If you use that Warren Buffett analogy of what happens when the tide goes out, you can see who's wearing a swimsuit and who's not. So when in a bull market like this, we're glad to have our assets get advertised. We're glad to have our projects, and we're happy to have our partners advertise about what we're doing. But ourselves, we don't try to out-scream other people. We try to have consistency. We show up to the same things and build relationships with our share owners. We're about share capital and share ownership, and we love to keep up with them.
All It's been pretty full on. A couple of meetings I couldn't get filmed, but I'm talking to Bob Archer next of Pinnacle Silver and Gold. I think he's going to want to get in front of the camera. They're smallish company, so about 10 million market cap. Just raised some money, not a lot, but $1.5 million, I believe. And they're going to have to be spending it in Mexico, I believe. So they're going to have to be efficient, and they're going to have to know what they're doing with their money. So I'm going to go ahead and talk to him and see what he's got to say. All right, Bob, so we're talking about spending shareholder capital efficiently. You just raised some, not a whole lot. So how do you make it, go a long way? What do you spend it on to make it worth it for the shareholders?
Well, essentially, because the development of the project is going to require more than what we just raised. You do this in stages, so it's really to get us through to the next stage. So obviously, we want to try and be as efficient as possible with money that we've raised, and try to spend as much of it as we can on the project with the guys working there. And we're hoping to be able to start a drilling program this fall sometime. And so, just talking to the environmental authorities right now, to try and get approval to commence that drilling program. So if we get that in the next little while, then we'll be moving ahead with that, and doing a bit of metallurgical testing, preliminary at this stage, but give us a good insight as to what we might expect down the road. So basically, just trying to move the project ahead as much as possible.
How do you manage the ratio between what gets spent on G&A and what gets spent on exploration, though, specifically in your case, because again, a smaller company, which means smaller budgets, but being a public company has a level of expense already as is, so you got to be doing marketing and everything else around it. So how do you manage that ratio?
Well, for us, our G&A typically is fairly small anyways. We don't have an office, for example. Everybody works remotely, and try to keep salaries down, that sort of thing. But we try to spend as much as we can on the project, as I say. So because our G&A is relatively fixed, that ratio will change depending on the availability of capital. So the more we raise, the more we can spend on the project, because the G&A is more or less fixed. So that ratio will change according to what's available.
Given that this is going to be a bull market, are you going to change something in the way you spend money? Do you think you're going to be spending more money on marketing? Do you want to maybe spend more money on salaries and staff so that you can find and retain better talent, or how do you see that?
Well, as the project grows, we will have to hire additional people. That's for sure. I've just engaged a project manager, for example, that we didn't have before. So there will be some additional costs like that. But again, those are all project-related expenses that we would need anyways. We'll be spending a little bit more on marketing, but there is a limit there, as to how much we were willing to spend. And, I've certainly learned after 45 years in this industry what works and what doesn't. And times change.
What do you think works in a bull market in terms of marketing, and how much should that cost?
Well, I think things have changed over the last 10 years or so, that we've been going through a bit of a bear market. Just in that time, we've seen the rise of social media and videos and doing interviews like this and that type of thing. So there's much more emphasis on that type of thing. It's not just going to conferences and standing at a booth the way you used to do 15, 20 years ago. So we have to change with the times, and we're trying to do that, and still traveling quite a bit. It's much more of a global exercise. A lot of our funding is coming from Europe now, so we have to cater to that market to some degree as well. But yeah, that's just keeping up with the times, basically.
Do you think you're going to have to raise capital again this year to sort of keep up with the tempo of a bull market, which is also different than what you would do during a bear market, during a bear market? Yeah.
Yeah, it's quite likely, just given the tempo of the market right now and what we're seeing. I've found that you often get windows in the market where it's possible to raise money, and depending on how things are going, the last few months have been very, very good, but other times that window can open and close very quickly, and sometimes you just have to take advantage of it. So you can only plan to a certain degree. I mean, that you're going to need funds at some point, but but sometimes you might have to raise the money sooner than you expected to, just because the opportunity is there. So, so we're always aware of that sort of thing as well.
Quite a busy first day, actually. I still have a couple of meetings and hopefully a couple of interviews. Next, I'm talking to Anthony Morrow of American Eagle Gold Corp, about $100 million in market cap, just raised a whole bunch of money with strategics earlier this year. So last time I went to site, actually, so cough, wink, wink, go ahead and watch that site coverage as well. But they're going to have to be efficient with that capital, because we talked about them potentially, and potentially is an important word here, but potentially not having to raise capital again. So although things are moving with tech and everything that's going on there. So yeah, I'll go and talk to Tony and see what that's going to result in. All right, Tony, what can you spend the money that you have right now? Because you have quite a lot of it. What is it that you're going to be spending it on, specifically during this bull market, so that you make sure none of it is wasted and it's all, like people say, shareholder accretive, I suppose?
It's just about putting the money into the ground. You saw with our latest financials, all the G&A and marketing that we have, it's covered by our interest payments. So, we're sticking by the same plan we had before this, I guess, gold bull run happened. We have a $15 million program. If we hit it out of the park and our stock's at $2 or $3 and the cost of capital is low enough, we'll think about doing a drill season throughout the winter. But right now, it's just putting those meters in the ground, those dollars in the ground, and sticking by the plan, and being fully funded for 3 years.
Well, and is that where the best value is during bull markets as well, or do you think you're going to have to go a bit heavier in the marketing? Because you and I have talked about that before. You said you're hesitant to work with too many groups. You want to do a lot of it in-house. So how do you think about that side of the business?
Well, I'm not a technical guy per se, like self-taught, but I'm not a geologist. I let the geologists, we have very talented ones, do their job. So my job is to market, and I think I'm pretty good at it, very good at it. So I'm going to use my expertise, the free money for the company. I'll spend money on marketing, and I'll do it. And I'll find the right people that will help us. But a lot of the stuff's guerrilla stuff I do on my own. We do our own Twitter, our own videos. We have enough following for the last 2 years of marketing that if we have good news, people will hear it. So that's kind of the key. But you can waste a lot of money. We're not the first company with $40 million. So it's just about making sure you follow the plan. You have your 3 years of funding, and if things change, you have some good luck, then you change your plan. But I think our marketing strategy will pretty much stay the same. But there's a lot of people with their hands out right now on the marketing side, on the conference side, and if you don't look after your pennies, the nickels are going to be gone as well. So that's one thing we're kind of focused on. The people in these big gold rushes, do you know who made the most money? It's the people selling the pots and pans, and the people in this gold rush right now who are making the most money, it's the marketers, it's the lawyers, it's the bankers. So we got to look after ourselves.
Yeah. Does that include the people who did that new hairdo in the stash?
That was my own. We saved company dollars. I combed it. I did have my my barber trim it for me, but it's a new thing. I'm trying to look like a cop.
Talk to me a little bit about staff here too, because I know you do, or you think a lot about that within the org group. Do you think you're going to have to pay management and staff more during the bull market, because maybe there are better opportunities elsewhere where they can make more money, but you don't want them leaving you, right? So are you going to have to pay more money to retain your talent?
You probably have to pay them a little bit more, but it's not crazy. So like a 5-10% increase in salary isn't going to break the bank for us, and it's about continuity. But the main thing for employers, it's how you treat them. And I think if you treat your people well, you have a good workplace, you offer good benefits, and they want to stay, I think that's the most attractive thing right now. I worked at IM Gold, and people got great bonuses there, but the thing we always heard the biggest feedback from were two things. They had Mexican Day, they had Chinese New Year Day, and they allowed people to have a week off during Christmas, and that really made a big difference. So IM Gold had a great culture. I know Kinross, Agnico have a great culture too, and people tend to stay there.
Well, you're mentioning some of the bigger companies here, and that's reminding me of a joke that I made for my introduction when I started the coverage here, and it was about, our company's going to have to spend more money on dinners with their strategics to keep them happy, because everyone's going to have more money and want to buy more expensive dinners for their strategics. There's an interesting angle to one of your strategics, though, with tech. Is that something you might have to spend more money on, or expect them to be giving you less money or less attention or something if the supposed merger goes through?
Well, the die is cast with tech. They gave us our money. They invested 3 times in 2023. They can't get it back. They are lending technical expertise, but tech's another company with great culture, great people, and they're not asking for more than anyone else is. All they want is communication, so that's what we're doing with them.
Any comments that you can provide on what's happening there, or have you spoken to them since kind of the rumor? Or
well, I've been meeting with them at Beaver Creek. It was very interesting news. It kind of caught me by surprise a bit, but I guess just wait and see. I think for us, I think it's going to be status quo. Again, we have the money that they invested. If you look at it, I kind of spin it as more of a positive. We have another bigger company actually looking at us that needs more growth, and also possibly some of those legacy assets like Shafts Creek and Galore Creek. Now there's a bigger company, Anglo, involved. Maybe they'll take a more strategic look at it. Maybe those won't be the projects that they want to work on because they have huge capital expenditures at the very beginning, and maybe they want to look at something with NAC. Maybe they have things in their pipeline that actually give them production within the next 5 years that replaces Galore Creek, and they look at NAC and they say this is something that gives us production in the next 5 to 10 years that we can build it. And guess what? It's at sea level. There's no trees. There are trees. There's no mountains. We can actually build it for probably a quarter of the cost of what you can build Galore Creek at. So maybe those new eyes will bring new attention to NAC and be good.
So you don't expect them to be dumping shares in the market if it goes through or something like that?
No, not at all. They're big supporters of us. Again, I said we're meeting with them tomorrow. They're coming to site. They still love the property. And if we hit what we're supposed to hit, even if they sell shares, they'll be very happy to gobble them up.
All right, so beginning of day 2, starting to look a little bit more human. I had just a little bit more than 6 hours of sleep, which is actually amazing. And kicking off the day with hopefully an interesting conversation with Dr. Ewan Webster of Thesis Gold. They're a $400 million gold developer with assets in the Toodoggone district of BC. Recently raised over $27 million with a strategic, and they're currently working on their PFS, which they hope to have out, I believe, by Q4 of this year. So is that going to change how they spend money or not? Well, I'm about to find out. All right, Ewan, I want to talk to you about making shareholders' capital worth it during a bull market. How do you essentially not waste any shareholder capital in a time when capital is maybe more readily available? So, yeah, what is it that you're going to be spending your money on?
I think for us, I mean, we had a great plan in place for this year coming into the summer. So really just sticking to that and kind of optimizing what we have in place maybe. So yeah, as you said, it's been a good year for raising capital. We raised 24 million with Centerra in April, and then I think 27 million in June, all kind of mostly flow through to help fund our exploration program that's underway. And that's about 15,000 meters of drilling. Most of that's exploration drilling on the Ranch project, really to kind of test new targets, both epithermal and porphyry. And, you know, maybe with that extra capital, we can do additional things to help support the drilling, like IP, like groundwork to kind of refine the targeting process as we're actually drilling. And then I think a bit of a combination beyond that, you know, pushing forward with the project, trying to accelerate the timeline. Obviously, cost of capital to shareholders is important, so if we can do anything like the drilling we did this year at Lawyers, actually was about 3,000 meters of drilling, and that was really just to give us a 6-month head start on the feasibility study. We didn't need to do it this year, we had the capital, but it helps move the project forward. So maybe that's a good example. And then I think really just hitting the conference circuit hard as well, getting the story out there to potential new shareholders. A lot of generalist capital coming into the market. Really seen that, particularly next week we're going to the Gold Show in Colorado Springs, and a lot of new meetings with different accounts, so that's kind of exciting to see. And then really just, and you know, to back up a little bit to the field program again, just pushing ahead with the completion of the baseline work. Feasibility study is going to be out in end of October, early November probably. Sorry, the pre-feasibility study, and we're going to begin permitting this year as well. So a lot of things happening that capital is going towards.
Is there a ratio that you're targeting from exploration to, let's call it, I call it exploration to administration really, but it's exploration to G&A, so everything with marketing and salaries and everything there.
Yeah, and I know that you've done, like, and even in our last meeting, you went through this, and I thought about it a bit more, and I think it's a very good ratio for exploration companies, but as we're transitioning into development, I think like it maybe not so as applicable, because a lot of our budget this year is really going to things that aren't even like flow-through eligible, for example, so they're not necessarily exploration. So the baseline work doesn't apply, all the engineering work, metallurgy, feasibility level work. So I couldn't give you a great ratio for that, but we have a separate budget in place for, like, our G&A is probably about $3.5 million a year, and then our marketing, that includes a lot of the marketing budget as well. So we're very conscious of how the dollars are spent, but the lion's share of everything goes in the ground, and I think that's, been our kind of MO for a long time.
Talk to me a little bit more about that marketing that you touched upon earlier. You said you're going to, but it's a bit of the Denver Gold Show, it's a bit of a bigger show, so that's where the producers are. And you mentioned generalist capital. I actually don't hear that a lot. I think you're maybe one of the few companies who gets more attention or gets attention quicker from generalists. How are you going to be targeting them? What are you going to be spending your marketing dollars on?
Yeah, I mean, I think the generalist funds, I started to see this happening probably the first half of this year, particularly with some marketing trips to the US. They were kind of maybe a little bit ahead of Canada, but precious metals heating up, and people that we'd reached out to before just wouldn't take meetings with us, and now they're reaching out to us, and I think that's partly the stage of the development that we're at with the project, where we're not a producer, but we're kind of one step below that, where the asset has been kind of de-risked substantially so for them coming in, maybe not knowing too much about the sector, it's probably pretty appealing because they don't need to know all the jargon, they don't necessarily need to know the particulars of the project, but if they want exposure to gold and silver, then the developer space is pretty attractive, I think, especially because it's been overlooked for a long time. So really kind of a bit of focus on the US, to be honest.
Yeah. As you're moving into development, I can imagine you might need some changes or addition to your staff members. Is that something you also plan on spending more money? And also the existing staff, would you have to essentially pay them more so that you can retain talent in a market where maybe there's better opportunities or will higher paid opportunities, let's call it, elsewhere?
Sure. Yeah, I mean, it's a good question. And we've been actively growing our team. And I mean, this year we added a new chief geologist, Evan, Kootenay as a VP IR. We added a new director of project management. We're about to add a new VP sustainability and permitting. So as we kind of embark on this kind of growth phase, I guess, a lot of people joining the team. And then in terms of retaining people, I think, fantastic project to be working on, which helps. Secondly, I think we've got a great team of people that all work very well together, and being able to kind of nurture that environment is, for me, is very important to kind of making sure that everybody's happy. We all work well together, and I think that goes a long way in retaining staff.
How much money do you have right now after the raise that you did with Centera, and how far is that going to get you in terms of maybe timing, but also milestones?
It's kind of fluid at the moment with all the work that I just described ongoing, but what I would say is that by the end of this year, going into 2026, we probably have about 20 million in the treasury. So we're very well cashed up at this point.
It is actually the middle of day 2. I haven't had much success with getting people in front of the camera. I am getting a little bit some better food, actually, some meat and potatoes, no longer only protein bars. Point is, I'm going to be talking to Craig Perry of Vizsla Copper. They're a $40 million copper explorer. They just made a porphyry discovery in southern British Columbia, so supposedly a lot of drilling ahead. They have some money, not an endless amount though, and obviously Craig's not one to shy away from raising capital. So I'm going to go talk to him and see what he's planning on doing. All right, Craig, I want to talk to you about not wasting shareholder capital during bull markets, because that seems to sometimes be a challenge in bull markets specifically. So what is it that you, with Vizsla Copper, but all the other companies that you work with or have worked with before, what is it that you spend capital on during bull markets so that it goes to good use?
Yeah, you do have to be very, very careful, and you always have to have a very considered approach to what you're doing in a bull market. And 14 years of this downturn and learning to be very careful with our dollars is good training. But you stick to your knitting. You really have to focus. You've got to be careful. Conferences and things cost money. You tend to bring more people to things. You really got to watch your bottom line, watch your dollars and cents, and remember how hard it was to raise dollars not that long ago. I don't know whether I can say anything more than that. Of course, costs go up, drilling costs, acquisition costs of projects and properties go up. You don't want to get carried away on that front if you can, but it is a tricky thing to manage, for sure. We've done it before, but you've got to be very, very cautious. Yeah.
What about for you specifically as Vizsla Copper? Now you made that new porphyry discovery there, so I suppose drilling would be the value bringer essentially for you. Is that what you're going to be focusing your money on, or is it a different combination of drilling and marketing, or how do you see that?
Yeah, look, it's a good point. Of course, we've got this fabulous new discovery. It's shaping up to be a really serious discovery. We've now drilled sort of, we put out a drill result there a couple of weeks ago, a month ago now, 300 metres at about 0.4% copper equivalent, but over a bigger, broader intercept of about 0.35% copper equivalent from surface, importantly, and right next door to the road between Houston and Huckleberry that has grid power on it. Huckleberry, of course, is on pause. They would love, I'm sure, to find more ore, so we'll be talking to them certainly. So we're thrilled with that. For us, and this is important. The other, just to go back to your earlier question and then come back to what we've discovered there, one thing that we are looking at going forward is that public markets have been so problematic for people for so long, and some of the success stories that we're investing in personally, Aquitaine's a good example, Donald McGuinness's Island Passage, they're keeping those companies private and funding them that way, and I think there's merit to that, because you spend so much of your time as a CEO not managing a company, but out here doing what I'm doing now, promoting it and marketing and talking to investors. It's much better if you can you can have a tighter team if you can do things privately. So that's something we consider all the time. We're not in that position, of course, with Vizsla Copper at the moment. But I can tell you we're thrilled with what we got. We put out a drill result there yesterday, a slew of drill results, but one of them mimicked that last hole, nearly, I think 270 metres at 0.43% copper equivalent, again from surface. And what that tells us is that it's a big system. So this is where it gets tricky, because now we've got a couple of more results to come out, so I'm excited about that. We've realised that we haven't found the margins of the thing. It's 800 metres long by 400 metres north-south. Could that give you 500 million tonnes at that sort of grade? Probably. But could it be bigger? We know that Gibraltar's just up the road. That's a sort of 1.5 billion tonne beast at about 0.25% copper equivalent. That's what it's starting to look like to me, so I'm excited about that. The majors are very interested given the scale potential there. But the other exciting thing is that it's in an 8 kilometre by 4 kilometre alteration zone. We've got two other targets that could potentially be porphyries there, but there's certainly no way that alteration zone can be related to just one porphyry system. So we think it's going to be much bigger and more discoveries to come. So we're hopeful for that. So that's very good. And then in terms of how we spend our shareholders' dollars and our own dollars as shareholders is what's important. So now we need to down tools, look at that data, look really deeply at what we've got, and then work out the best path, because we will have to raise money at some point late this year to fund the next stage of drilling. That will be a resource drill out, that sort of grid drilling almost, and they're expensive things to do. Do we want to raise that much money at this price, or do we just raise a smaller amount that gives us a good program, may not prove up the full resource, but gets us on the way to doing it? And so, there are all those sorts of, it's a bit of a matrix type of thing. There's all those sorts of considerations before you launch back into the next phase of exploration on this project.
Do you think you might have to pay your staff more money during a bull market because there are better opportunities elsewhere maybe? or better paid opportunities?
Look, retention of staff in these sorts of markets is tricky. Of course, vast amounts of money are being raised at the moment. There's a lot of drilling going on. As an example, labs are massively backed up. So it's something that you have to consider. I think what we do, and a lot of companies will do, is pay more in equity, and people are pretty sanguine, comfortable that their net worth growing as you drill out it or make a discovery and drill out a deposit. So we're very, very fortunate. We've got a good group of loyal people who love working with us. So it's not been an issue for us, but it could well become one. So it's something to consider. If you go back, when I first started, we were in a downturn, but during that last boom when I was at Rio Tinto, we were paying people double what I was getting paid when I started at Rio just to get them out of university and onto the book. So cost pressures are an issue.
Well, what about marketing? To go back to what you said, like you're here, you're there, you're traveling and doing some marketing. Do you have to increase marketing spend during a bull because other people are being loud, and so maybe you try to be louder than them or not? How do you see that?
No, it gets easier. I think, in my experience, we've probably done less marketing in a bull market because, people are watching the space more closely. People are more familiar. There's more eyeballs on a story during a bull market. During this downturn, like it really over the last, if you go back a year, you could spend as much money on marketing as you wanted, whether it's digital campaigns or mail outs or whatever, interviews, all of those sorts of things. And that wouldn't be reflected in your share price at all. So there's a sort of balance there. I suppose what we're seeing now is that there is a return to bang for buck for marketing. You see an improvement in share price. So it's sort of, muddling your way along, trying to sort of weave your way through the path and figure out, what's the best approach, but always with a very cautious eye on the bottom line.
When I did my introduction here, I joked about it. Should companies maybe spend a little bit more money on more expensive dinners for strategics so that you can maybe get the actual big bucks in? Is that something you have to spend money on or more money on during bull markets?
No, I don't think so. Although, what I can tell you is that some, other costs go up. We've got a slew of companies going up to Poplar over the next month. So you've got to fly all of those people up there and pay for all of that. No, you don't spend more money on dinner, although I do notice that Neil and Nikki Adshead have got that, they've taken, I think it was an Aussie company that came up with the resource clock cycle, and they've put inside that, the quality of swag goes up when you start seeing people wearing Arc'teryx jackets for junior companies. It's probably a good time to sell.
All right, so what kind of Vizsla copper merch are we going to see sometime soon?
Oh, yeah, that's a good question. We're sort of trying to avoid it. The Vizsla silver, though, I can tell you we've got a wicked line of merch. Mike Connett, the CEO there, my business partner, he's got a sort of, skating background, so I think we've got some of the coolest merch, and it's not expensive because it's, generic clothing printed to look sort of, skate brand cool. Not Arc'teryx or Patagonia jackets. And I can tell you, I'd never put anything on a Patagonia jacket ever again. Those guys hate mining and they hate oil and gas. They're not our people.
All right, just coming out of back-to-back meetings, I think 6 or so, some impromptu meetings, which cool as well. Nothing to be filmed, though, unfortunately. Some of you guys are coming to shake my hand, which is really cool. It's always very welcomed. And now I'm going to be talking to Darren Klink. He's a president at Arras Minerals. They're about a $100 million copper exploration company with assets in Kazakhstan. They've also got plenty of money right now. I went there on site to see the projects as well, so cough, cough, wink, wink. Go and watch that movie if you haven't yet. But yeah, what they're doing right now and the drilling success that they've had in Kazakhstan, is that going to change the way they spend money? Well, hopefully I'll find out. All right, Darren, I want to talk to you about spending shareholder capital and how you do that efficiently, specifically during a bull market, because things could be different. What do you think is going to be the best value for Arras' shareholders? What are you going to be spending on?
I think you still have to be very meticulous and sharp about what you're doing. I mean, just because it's maybe easier to come by and companies are raising more money doesn't mean you need to be spending it. But no doubt, I think when you've got more eyes on the screens and more groups are paying attention, and we're seeing that here, at the conference where we've got a lot more investor, a lot more sort of interest, then that's also your time to, add extra drills and get more results out and kind of push those projects forward. Where, a couple, 3 years ago, you kind of want to hunker down and protect your share structure, I think, right? So for sure.
So you think it's more drilling that you're going to be spending money on? It's not going to be more expensive dinners with tech or something like that?
Well, to be honest, tech normally pays the bill, and they're not normally that expensive. No, absolutely not. I mean, you definitely want to have the word out. I mean, I think you've got to differentiate yourself, and there's hundreds of companies here for sure. So you have to make sure that you're communicating clearly and differentiating what you're doing, particularly when you've got real projects and you're making real gains. But at the end of the day, it's the results that are going to push things along, right? And so I think we're heading into a good spot here now. I think the world needs more copper. The world seems to be really interested in precious metals at the moment, and it's a finite resource, right? It's hard to find these things. So,
in your case specifically, what's interesting to me as well is that Kazakhstan is gaining popularity. So you see more and more companies coming in there, and so I'm thinking, are you going to have to pay more money to your staff to retain talent in that case for two things: bull market and also just more interest. So, and specifically for your local staff, but also maybe talk about management and sort of your VP of X and so on. Sure. Do you think you're going to have to spend more money on staff and management?
I think, Arras is pretty competitive. Obviously we try and strive and get, really good people. I think, we're arguably an employer of choice, where we're at in Ekibastuz and in Kazakhstan, we've got some great people that are all sort of on the same team rowing in the same direction. And so we strive, of course, when it comes to compensation and incentives, of course, to make sure that we're fair and equitable and making sure everybody wants to row in the same direction and be successful. So, I don't see that as being an issue. I think definitely when you get into marketplaces where there's more work happening, and of course that could be anywhere, then you're going to see more pinch on technical staff. But Kazakhstan's done a great job. I think there's a lot of great geological schools, mining engineering schools, and it's something actually that we don't have in the West as much. There's not as many kids and students over the last 10 or 15 years that have growing up and wanting to be mining engineers. It's starting to change, but in places like Kazakhstan, that is a very well, sought after career, very respected career, and there's some great schools, and we've got a great team of Kazakh sort of professionals that are trained in Kazakhstan and are doing great work at Arras.
Yeah. What about lobbying? Is that something that's going to start forming in Kazakhstan? Do you think you might have to spend any money on lobbying for, I don't know, government grants or anything related to permits or anything just jurisdiction-wise?
The government's our biggest, proponent and supporter. I think, again, we're fortunate. We're not having to kind of try to convince anyone that this is a good thing to do. I mean, they're telling us this is a good thing to do and encouraging us to find things and then asking us, well, when are you going to build a mine? So, there's not too much for lobbying. There's a lot of team approach partnerships with, our government partners, and different than some jurisdictions where you still got to kind of convince folks that this is needed and it's a good thing.
When are you going to build that mine?
Early yet. Let's try and find some big deposits and then we'll figure that out.
Are you going to have to raise any money anytime soon? How much money do you have right now? How far does that get you?
No, so we're in great shape actually. I mean, Kazakhstan's one of the lowest cost jurisdictions in the world, so it's very different than if you've got helicopters zinging around and having to spend thousands of dollars an hour on moving things around using aircraft. We've got between $15 and $16 million Canadian in the bank, and we're well financed to do all the programs we're doing this year and well into the back end of next year. So no, we're in good shape. It's a great place to be in, and I think we've had really good support from our shareholders, and they continue to support us, and they want us to keep going and keep finding things. So yeah.
All right, so next up is probably one of the most interesting interviews actually from this conference, because I'm talking to EMX Royalty, and they've recently proposed a pretty interesting deal with Elemental Altus. I don't think we're going to have time to deep dive on that, but I know Dave and I will be sitting down for, hopefully Fred too, for a deep dive sometime soon. As always, all questions are welcome to put them in the comments here or just message me or wherever you can find me. But now I'm going to go and talk to Dave and see what he's going to be spending shareholders' capital on. All right, Dave, you're probably my most interesting interview right now. And I'm not saying this to flatter you, but it's because after the merger that you're doing now with Elemental, it's probably going to change the answer to the question. And the question is, how do you spend shareholders' capital during a bull market so that you can generate the most out of it, essentially? And with you, with that scale, what do you do? Do you do more deals, more marketing? What is it that you're going to be spending money on?
So, astute allocation of capital is the most important thing that we do, right? And historically, EMX Royalty and going forward with Elemental Royalty Corporation, our business model will be the same. And that is certainly, we love gold, and gold's in a bull market, but it's only recently been in a bull market with respect to how the stock prices have moved, right? And but to really dive in on the question, we also love copper, we love lead, zinc, silver, molybdenum. We're across the metal space. That gives us multiple bull and bear market curves to work with. We like to take advantage advantage of downturns in the market to acquire prospective mineral rights, part and parcel to our royalty generation business, and then sell those in times when capital flows are strong, such as they are right now. And then with respect to purchasing existing royalties, we've been more active on the copper side of recent because those have traded at valuations more palatable to us. We like to think we're the value players on the block. That being said, we're always desperately trying to turn over stones to find assets to buy at reasonable prices. That same ethos will carry forward in the merge co as well.
Okay. Would you have to market differently though? I imagine you sort of your competition just changed. I mean, you used to have other competitors and now you've kind of leveled up essentially. So will you have to match their marketing spend in order to stay, top of mind for investors?
That's an interesting question. So our market cap will essentially double with this merger, and there will be forced index buying because we now be put into different indexes around the world, which is good. That's a good thing. That will becomes a self-fulfilling prophecy, actually. With respect to marketing specifically, I might be naive, but I think to some degree it's actually a little bit simpler because now we're a billion-dollar market cap company. More people, more banks will do analytical work on us and advertise on our behalf at no cost to us. Not that we're not going to go out and do marketing ourselves, but it does change the equation from that perspective. And I'm happy to admit that it'll be a learning curve for us to take in the lay of the land and think about what will work best.
What about retaining talent? I know that's a big thing as well in specifically mining, definitely within the royalty space. Do you think you're going to have to pay higher salaries or offer better packages for your staff in order to attract and retain better talent?
Yeah, I think that salaries will inch up over time as they have throughout my career. I'm not particularly worried about that right now because we are merging, and EMX had trimmed our staff a bit prior to this merger, as had Elemental. And I think that the bringing together of those two teams are very synergistic with respect to past experience base and educational and what our skill sets are. It merges together really well, which is why we've been discussing this possibility with Elemental for nearly 2 years. And just got a huge amount of respect for David Baker and Fred Bell, and I'm really looking forward to working with Juan Santori, who's our chairman now, or chairman of the incipient company. I think that there's excellent synergies there. I'm not worried about hiring new people. I just want to make sure that I keep these strong players, A-plus players from both sides together, working efficiently to create value.
All right, so it's the beginning of day 3 now. I am kicking it off early on with a meeting that I'll do with Matt Manson. He's the CEO of Radisson Mining. They're a $220 million gold developer with a historically producing asset in Quebec's Abitibi Greenstone Belt. I know they'll be doing a lot of drilling. I think they have about $50 million in cash, if I'm not mistaken, or had during their last, or at the end of their last quarter. I'll be asking Matt about that, though. And the question is really, what are they going to be spending that money on? I suppose there's going to be a lot of drilling in there, but is it infill? Is it step out? Is there anything else in between? So yeah, let's go and talk to Matt. All right, Matt, I want to talk to you about spending shareholder capital during a bull market, specifically because a lot of money does get wasted during bull markets. So how do you make sure you're not doing that? What do you spend your money on so that it's worth it for the shareholders?
Well, I think about 90 or 95% of our money right now is spent on drilling. So, we're doing a big 50 to 60,000 meter drill program, and I think that's the best use of capital in a bull market. I think it's what, investors are looking for, stories that have quality and that have momentum and are going somewhere. And companies can raise capital efficiently in the bull market, and the best use of that capital is very much putting it into the ground. So we've done recently a PEA, so we did spend a little bit of money on engineering and consultants and environmental baseline work has started as well, but predominantly for us it's still at this stage drilling in the ground.
Yeah. Talk to me a little bit more about why you think that is, because 95% still means that maybe you don't have that much money left for marketing, and in a bull market everyone's trying to be super loud with their marketing. So how do you stand out in that case? Is it just the news releases and delivering on the business objectives, or how do you stand out?
Well, I think if any mining company is spending a material proportion of its annual budget on marketing, no offense, because this is the world you're in, something's wrong probably there, right? So everything's a balance, right? You don't want to have no presence. We do a lot of online interviews like this one we're having right now. We get out on the roads as much as we can. We come to things like this. So we are spending money on marketing. But at the end of the day, I think the people you're marketing to want to see you spending money on the business, right? And the core business for us at Radisson at this stage in our development, and with the success we're having with the drilling, the core business is drilling for sure.
Yeah. What about retaining staff and maybe taking on new staff as you're moving into this development phase here? Would you have to spend more money on staff and management so that you have the right people to keep pushing the asset forward?
Yeah, that's for sure, and that's part of our go forward. We're actually hiring right now. We're adding a couple of key people in the. We're looking at bulking up a little bit on the engineering side. We're looking at bulking up a little bit on the environments and communities side, and that's with a view because our business has got to the stage where with this PEA out, we're now giving the directional guidance to the market as to where we think our project is going. So on one hand, we're still drilling, we're still making the ore body bigger. We're having great success below the old mine at O'Brien. That's the O'Brien project we're talking about, of course, and below the resource. Recent drill results are showing again we're pushing that resource down. So we're making the project bigger. But with the first engineering study with the PEA, we're showing that path that lies ahead of us, the best way to develop the project. So we've already started now moving that ball down the field towards project development. And at this stage, that means, putting in the right people for sure, right? And I've done this before, and I think having the right team in place early on is important. So we're a small team at Radisson, and it's been a team that's been primarily focused on geology, exploration, the logistics of our business. But yeah, I think at this stage, bringing in the right people is very important. And of course, this has been a chronic challenge in the mining business for a long time now. Is people, is HR, right? Is having the right people at the right time, dedicated to the mission. We have a chronic shortage of professionals in the mining business at every level of the business, I think, right? So getting ahead of that issue early on is important.
When I did my intro here just a couple of days ago, I joked about it. Oh, our company's going to spend more money on more expensive dinners with strategics because everyone's trying to get the strategics to look at their projects, especially during a bull market. Is that something you're going to go after, essentially lobbying with some of the bigger companies? Is that something you want to spend some money on?
I don't know if it's a question of lobbying with the bigger companies. And the junior companies rarely pay for the dinners, by the way. So we're saving shareholder, capital that way. I think everybody knows everybody else, right? The senior companies have a mandate. They've all got corporate development teams here, right? And they've got a mandate to keep tabs on what's happening with the smaller companies and with the projects that are coming up. And so there's constant dialogue and engagement at events like this, but also regularly outside of events like this, right? And we all know each other, right? And in many cases, people have worked together in other companies. There's a lot of familiarity. So it doesn't really, the engagement between companies doesn't take the form of expensive dinners and lobbying efforts, right? It's, oh, Joe, how's it going? I want to get catch up on what you're doing, and let's take some time. And in many cases, of course, a lot of these companies will have NDAs and they'll have due diligence processes going on, and there'll be major companies keeping tabs regularly through data rooms on what these companies are doing. That is a culture within the mining business for sure, and a lot of that's going on in the background that you don't see, right? But a lot of it you are seeing here because all these companies have corporate development teams and they're all going in and out of different meetings.
Yeah. How much money do you have right now? How far is that going to get you? When's the next time you're raising capital?
Exactly 14.9 million at the end of June, end of our second quarter, and that's a healthy treasury. We did a financing in May that was very successful. Stock price has doubled since that financing, more than doubled. And that gives us fully funds our drill program, that 50 to 60,000 meters, well into next year, right? So we got heads down right now on the drilling, 4 rigs going. We could do more. I mean, we're very encouraged by the progress of the project. We could easily double that and really go hammer and tongs at the project at this stage. But diligent, 4 rigs, these deep holes, pushing the resource down, and well financed to do that, going forward.
All right, so just coming out of my meeting with Matt, interesting talk, but I'm headed straight into another meeting in just a couple of minutes here where I'm going to be talking to Jeff Swinoga of Exploits Discovery. They now have assets in Quebec and Ontario, but they're also currently trying to transact their Newfoundland assets into newfound gold. But a 10 million market cap company, so as you can imagine, capital is not self-explanatory there, although if that deal goes through, there might be more liquidity, and so they gotta have to figure out a way to spend that money efficiently. So let's go and talk to Jeff and see what he wants to do with the money. All right, Jeff, I want to talk to you about not wasting shareholders' capital during a bull market, essentially. How do you do that? What do you spend your money on to make it worth it? And especially in your case, because you've had a bit of a restructuring right now.
Yeah.
So talk to me about that.
Well, thanks, Antonio. Honestly, you're doing a great job. Keep it up. For us, we've had quite a transformation over the last 5 months. We picked up almost 700,000 ounces of gold, and we've also monetized our Newfoundland claims to newfound gold. So in terms of, gold prices going up, we've got new properties. We're putting new people, like we just hired Natalie, a great geo, loves the Hawken project in Ontario. So in terms of saving money, I think what we're looking to do is accelerate these projects. And actually we did this non-dilutive, you can call it like a financing, by monetizing our Newfoundland properties. And that gave us an overall value of the deal is about $10 million, in my opinion, because we have that 1% NSR. So we're really getting things going. We've been setting the stage for a high gold price and actually getting gold ounces in the ground. Like we talked 5 months ago, we would have no gold resources because we had lots of gold zones in Newfoundland. But now we're very fortunate to be in a situation where shareholders can participate with a rising newfound share price, rising gold price, and also we've restructured our team, to your point about reducing costs, to make sure that we're doing the relevant programs that make sense for each of the projects. Mm-hmm. And we do have, the question we do get is, how are you going to manage 4 projects now, right? So it's going to be very important how we allocate capital, and do we have the right people on the job to do the right programs. Like we're not drilling yet. We will be drilling hopefully soon in the fall, but putting in programs, for example, like geophysical programs, to really understand where these anomalies are and where those characteristics line up with existing resources. So that's not that expensive, but it's very important to kind of understand the geology first, right? So we want to do that first, and then we want to start drilling at some point.
How do you manage that ratio there between what you spend on the projects and what you spend on the corporate stuff, retaining talent as well as telling the story?
Yeah, no, great question. And for us being in transformation, I like to think of it as new exploits or exploits 2.0. So we do have to get out there and tell the story. Like right now, if you look at our pro forma cash and treasury with the shares we've got from Newfound coming soon, it's about $10, $11 million. And our market cap's only $9, $10 million. So there's a valuation gap right there. We're getting no credit for almost having 1 million ounces in these, historic ounces in these projects. So it's our job to get out there and start telling the story. Doing interviews like this, for example, is very important. So we do have to spend money to communicate, to shareholders, get out there and talk to people. Going to Beaver Creek, for example. And so it is a lot of work to do that. But the key thing is putting money in the ground, like you said, and making sure that we're not just drilling in areas that just to drill the current resource. You know what I'm saying? Because there could be something bigger and better out there, along strike or down deep, right? You want to make sure that we're not just building ounces to say we've got, instead of 700,000, we've got 1 million ounces. But you know what? We want to make sure that we're going into a multi-million ounce exploration company. That's what our goal is.
Yeah. How much money do you have right now? When's the next time you're going to be tapping into the markets?
Yeah, no, great question. Last reported we got 3.6 million, all hard dollars. The valuation of this Newfound deal is about 10 in total, but $7 million in Newfound shares, another 1.8 if we deliver certain claims. So still pro forma about 10 million. But we do have to have a shareholder vote for it, and we do have a hold period for about 4 months afterwards. So right now 3.6 million, which is great, and that'll be useful for us. And then we'll get into what we do next year with the Newfound shares.
On the topic of talent and raising capital, what is your staff compensation going to be tied to, staff and management? Is it having raised capital? Is it tied to your share price? What are the KPIs there?
Yeah, no, mostly it's for key people that, like Natalie, for example, she's a great PhD. She was actually the former VPX for the company that had the Hawkins project in Ontario. This is a 60-kilometer land package. It's big, right? So having someone super smart like that, she's on retainer. She doesn't have an hourly rate as well. So it's variable that way. We also have a person, Mark Richardson, working on our Quebec properties. He's on retainer as well, but also variable with respect to per hour. So as things gear up, they will get paid more, and as if we do have a lull for whatever reason, then we could pay less. Yeah, so we can. That's kind of the new structure going forward for us. We want to be highly efficient, do smart exploration, and deliver a lot of value for our shareholders.
All right, so I've actually had about an hour and a half to just chill in the sun, go to the pool, have a cocktail. No, I'm just kidding. I've had 4 coffees and nonstop shaking of hands in the last hour or so. But that means I'm ready to go and talk to Mr. Andrew Chubb of Awalé Resources. They're a $60 million gold explorer with assets in Côte d'Ivoire. They recently got some money from Fortuna Mining, which is an interesting deal given that they rarely take equity positions, but that means they're cashed up. And my question is, what are they going to be spending that money on? Is it the 100% stuff? Is it something else in between? So, yeah, let's go and talk to Andrew Chubb of Awalé Resources. All right, Andrew, I want to talk to you about spending and essentially not wasting shareholders' capital during a bull market. What does that look like for you? What are you going to be spending money on so that it goes to good use?
For us, it's all about, I guess, breaking away from being seen as a joint venture company. So we've got lots of other, 2/3 of our project is actually 100% Awalé. So we're deploying our capital into our 100% ground and looking to make discoveries on the 100% ground in the new year. So we're in a target generation phase. We've just flown mag, we've done stream sediments, and we'll be compiling that data towards the end of this month. Then building targets, and where the budget we've got set aside is to drill at least, or the best 6 targets in the new year.
What is that budget, and what's the split going to be between money going into the 100% stuff versus money being spent on the corporate stuff, so G&A, marketing, and everything else?
Yeah, okay, so we've got an $8 million budget, and between now and the end of 2026, and the bulk of that is in the ground. So more than $6 million is going into the ground, and so yeah, that's how it is. And we've already got a $15 million treasury. So this is Canadian dollars, and so we're in a comfortable position at the moment. We've got support from Fortuna, and that's where we're deploying the money that Fortuna put into the company is into that 100% ground.
And that's you deciding where the money goes then, or is it, does Fortuna get a say, or does anybody else get a say into where you spend Awalé's money on?
No, we've got a tech committee with Fortuna, but effectively that's for us to keep them informed of how we're deploying the money. So we've proven that we know what we're doing in the district. We've made multiple discoveries, and our neurology is the discoveries that we have made within the joint venture. So we've got high confidence that we'll be doing the same thing in our 100% ground.
Are you going to have to take on or find more talent to take on, so new staff, or do you expect having to pay higher paychecks in order to retain current talent?
That's something that does happen in a bull market. Look, we have got an excellent team, and we work well together, and we've got a really good culture. So I always want to look after our people, but in a bull market that can happen. So salary levels can sort of reset during that time. We've already increased team to make sure that we can still operate the joint venture, which is becoming very much more of a brownfields kind of play. There's going to be a lot of resource development drilling on the joint venture, but we've now got our greenfields team, and they are dedicated to discovery. And then we've got a brownfields team which is dedicated to more feasibility kind of work and looking to put out our first resources towards Q2 next year.
What about upper management? Is your guys' paychecks going to be tied to any specific KPIs like the share price or a new discovery in the 100% stuff or something like that?
Yeah, so new options and RSUs and things like that. There are ones coming out soon, and they're going to be tied to our first 2 million ounces that we have as a company. And it is us that's discovered that 2 million ounces, and people deserve to be rewarded for that because that's significant, right? So that's a really big thing for us. So that's what they're going to be tied to.
Côte d'Ivoire is about to have elections not too long in the future from now. Do you expect a change in government, and would that mean you having to spend maybe more money on lobbying or something like that?
No, look, sure, there's going to be an election, but our regulatory framework, we don't envisage that any of that changing. So it just stays status quo, and we let the election happen. That goes through, but it shouldn't. It's not going to affect our business or any of that regulatory framework.
Okay. You don't expect having to spend money on better dinners now that you have two large companies working with you?
No, I think we just operate the same way. Like one thing that we've proven, and it's one of the things that we got the feedback from when Fortuna came in, one of the key things that their team came back to us with is they were extremely impressed with what we had managed to do with the budgets that we had. Mm-hmm. So we really get a lot of bang for our buck because we put all that work into geology and making sure that when we're spending the big bucks on drilling, that the targeting's really done well. So, that was really nice feedback to get from Fortuna.
Yeah. One of the criticisms, I suppose, that I've seen about Awalé is the speed of the assays. Is it something that you can do? Could you pay more money and get quicker assays? Because again, bull markets are all about speed. So is that something you can influence?
So look, there is only a few results that we haven't got right now. We've actually published most of the results. So every now and then something in any system, something might fall over. And with our things, the multi-element samples, the system just fell over, and it just fell over badly, and we've had to send new pulps and do things, and so it just happened to us. It might have happened to another company and not happened to us this time. It just happened to us, and so we build good relationships with our service providers, and we continue to do so. Yes, you can pay more to rush samples if you need to, but generally we've had a good turnaround time. So all throughout this year, we've generally had a good turnaround time. We've been publishing results as we said we would. It's just right at the end of that drill campaign. We've just it's just fallen over. So, but it'll all pick up again and be fine. So we've got the RC results coming through for like what we call the BBM satellites, and then it looks like the deep drilling that we've done, the turnaround is on target. So we'll keep putting out results, and it's all okay.
Well, on the topic of operationally, I know you recently spent some money on getting your own lab on site up and going. Is that all? Is the cost made, or do you expect having made any more expenses on that one to get it? Yeah.
No, so that cost is done. And we've actually just spent the last 6 months optimizing that process, right? So, it's new equipment. We need to understand and have confidence in what we're seeing with it. So we've actually done cross-analysis between it and the lab and how long we need to roll the samples for and do that. So we've been optimizing the system. We're now comfortable with the system, so it's ready to come into its own when we're launching into our 100% ground. So yeah, that's going to be good for us moving forward. Don't forget, everyone, that it's not an accredited lab. It's for our internal use to accelerate things and move them faster, and also pre-select samples that actually do go to the lab. So we still need to send samples to the lab as well. It's just for accelerating our exploration process.
All right, I didn't have much success filming many of the last couple of meetings. I had a bit of a break in between lunch and everything. It's basically the end of day 3 now, and I'm going to go and talk to Kootenay Silver. They're about a 100 million, call it 115, 120 market cap company, Silver Explorico, with assets in Mexico, and they're moving along with that asset. It'll be interesting to see what they're going to be spending the money on, given the fact that they're in Mexico, right? So maybe a bit of political lobbying, maybe something else in between, and hopefully it's all small about it. So let's go and talk to him. All right, Ken, I want to talk to you about spending shareholders' capital during a bull market, which I know you've been through a couple of those. So what's the most efficient use of shareholder capital? How do you make sure you're not wasting money during a bull market?
Antonio, that's a great question, and given our current environment, I still think we're at the beginning of this market in the early stages. But as for spending shareholder money, Kootenay did a financing in June. We announced $12 million. We quickly raised that to a $20 million bought deal, and with those funds, we're looking to spend the money in the ground, and that'll be at Columba. We have a 50,000 meter drill program planned. Columba has 54 million ounce resource, silver resource, and it is our prime focus is Columba. We're drilling 50,000 meters. So spending the money is important. Put it in the ground is where you want to go.
What are you thinking in terms of ratio between how much goes into the ground versus what you spend on running the company, exploration versus administration, essentially?
Well, you want to run as lean a team as possible. We have a small office in Vancouver, really staffed by 2 or 3 individuals, primarily our finance side. Jim McDonald works out of Calgary and also is down in Mexico the majority of the time. And our group in Mexico is out of Hermosillo and also out of Chihuahua. So the focus is men on the ground spending money, men and women spending money in the ground on a yearly basis. Our company has been around, Kootenay's been around for over 20 years. We've raised $160 million. We've spent at any given time on grassroots exploration $500 to $1 million a year in grassroots. But when you have flagship properties like Columba, La Negra, Promontorio, and La Cigarra, we have 4 major projects in Mexico that consist of more than 325 million ounces of silver equivalent, 200 million ounces of silver, pure silver. So spending the money in the ground is critical, and that's what we've done over the years.
Seems like the weather is sending us some kind of a message. Let's move around the corner and continue the conversation. All right. Well, now that we're in and away from the elements, I suppose, I wanted to talk to you about just continuing the conversation about what are you going to be spending shareholders' capital on to make it worth your while, and that ratio between exploration and administration. Why I ask you about that is because I'm wondering, are you going to have to spend more money on staff so that you can attract and retain talent? Because maybe there's better paid opportunities during a bull market for your geologists or even some of your management. Is that something you want to spend more money on?
Well, we'll always increase the staff when it requires, such as Columba, the drilling. We've got 2 active rigs right now. We have 50 men on site, men and women, and in order to increase the drilling, that's going to require additional staff. But our core team that's been with us for well over 15 years plus, we involve them in every aspect of the company. Each employee and each member of the team is involved in options, restricted shares, and DSUs, as they would call them. So we give everyone a little taste and a little bit of a interest so they feel the ownership of the company, and that's important, and we haven't had difficulties retaining staff, and in fact, led by Jim McDonald, the staff are extremely happy with his leadership. He's constantly on the ground in Mexico and also in Canada.
Yeah. Talk to me maybe a little bit more about how you reward staff and management, and again, specifically with that idea of a bull market. Are the KPIs going to change? Are you going to pay better bonuses for better share price performance or something relative to your resource or something like that?
Well, I think as the company does better, the majority of incentives with a publicly traded company are in the market, and those are all publicly released incentive plans. And as we advance the projects, as we have more success, as an example, Columba, 54 million ounces in the ground. We're drilling now. We feel that we can double that resource. That's going to increase it by potentially up to 100 million ounces plus. The market is going to react. The share price will increase, and employees and team members all benefit.
Right. What about marketing? Bull markets are notoriously loud and noisy when it comes on to marketing, especially within venture capital. Is that something you plan on spending more money on this year?
Well, I think we've always been out marketing, and our approach is to get out in person, to go to the various events. We're at Beaver Creek this week. We attend many of the mining conferences that involve industry specialists, fund managers, and investors, and so on. So this is a continual project and activity, and again, that's led by Jim McDonald, Raj Kang, and others in the management.
Is there something else that you think you might have to do in terms of lobbying, specifically being in Mexico? I understand it's underground and not open pit, and that's where most of the challenges are right now. But do you think you might have to spend money lobbying in Mexico?
Well, again, I'll speak to our leadership. Jim McDonald has been in Mexico for over 25 years. Started his career in Mexico with various projects, most notably National Gold, which merged together with Alamos. They developed the Mogotes project, put it into production. So Jim has a lot of experience. We were meeting with some Mexican representatives today, one of the major mining companies that also puts together a conference, a special conference in Chihuahua where we're working with Columba. And at that meeting just an hour ago, they invited Jim to come down and speak and be a keynote speaker to talk about our project, the success we're having, and the involvement of all the team members in Mexico and Chihuahua, and also Sonora, where we're stationed.
Speaking of money and spending capital, how much money do you have right now? When do you think the next time is going to be that you might have to tap the market?
Well, as I mentioned, we did a financing in June. We announced $12 million. We went to $20 million. We're sitting on approximately $19 million currently. We have $7.5 million worth of warrants that are in the money right now, and I would expect that those will be exercised over the next couple of months. So we're looking at somewhere in around $25 million plus, with a program that's fully funded, and expectations that we'll hit 100 million ounces of silver on one project. That'll push our overall resource up to 375 million to 400 million if we're successful, and we expect all the success in the world.
All right, it is day 4. I'm tired, boss. We're averaging 30,000 steps, actually. I was looking at that. Normally don't look at that type of thing, but it's tiresome, but happy that anyone wants to talk to me. And I'm going to be talking to Kingfisher Metals here first with Dustin Perry. They're a copper gold explorer with a big land package in the Golden Triangle, British Columbia. I visited the project this summer, so wink, wink, cough, cough again. If you haven't watched that, go watch that. They just had some assay results. So is that going to change how they spend money during this bull market? Let's go and find out. All right, Dustin, I want to talk to you about spending shareholder capital during bull markets. What is it that you're going to be spending your money on so that essentially it doesn't get wasted, because bull markets are notoriously the perfect breeding ground for inefficiencies. So how do you avoid those?
Well, luckily, I've spent almost my entire career in a bear market, so I don't think it's actually going to change anything. It's not going to change the way we explore. Obviously, we might have more access to capital, but we're not going to go dilute more at the same price or whatever. We're going to take lower cost of capital. Sure, we'll spend more, but it's not going to change the methodology we go about. It's still going to be systematic. I don't think it's going to change anything. We've been very aggressive during a bear market, and if we hadn't been, we wouldn't have the ground we had today.
Well, shouldn't it change something? Shouldn't you maybe be spending, more money on retaining talent or finding people who might have better paid opportunities elsewhere, and you just make sure you keep them, because again, that's kind of the lifeblood of this.
Well, that's what we did last year. We kind of didn't spend a ton on exploration. We worked on tying up ground and building the team to set us up for now. So we do have an incredible team, and if the scale of the company increases, we will look to scale that up as well. And luckily in BC, between our whole network, we know a lot of people, and we're respected for what we're doing. There's not a lot of companies that are doing this type of systematic exploration, so I think we can retain more talent. It's a thing you'll scale up when needed, but right now we are fully capable of handling the type of work we're doing, which is still pretty aggressive exploration.
What do you mean by if the scale of the company changes? Is that, are you planning expanding it, or are you talking about better intercepts, or what are we talking about?
Yeah, all the above. If you've got more access to capital and good capital at a higher price, with a better market, with good results, all the above. If we have more ground, all these variables, you might need more people. But right now, it's not a huge. We're forward thinking on all of this, obviously, and it's trust me, last night my VPX and I were talking about different people who we might want to poach in the future. It's always in the back of your head, but immediately there's no need to do anything different. And if we do need to, I'm confident we can pull it off.
Yeah. Do you think you might have to spend more money on community relations during a bull market just simply because others might?
Well, I think we're already ahead of the curve on that. I gave a presentation to the Tahltan First Nation, which is our Indigenous partner. We're entirely within Tahltan territory. I gave a presentation at the MEBC Roundup last year, and up until that point, 78% of our 78% of our exploration expenditures had gone into Tahltan companies, which was higher than Tech Resources, marginally, but it was higher. And we've got exploration agreements with them. We were very good about being transparent, monthly updates with detailed information. We've brought on Paul Gruner, who is formerly the CEO of the Tahltan Nation Development Corp, on our board. So that's one place I would hope that we're not going to make any missteps, where a lot of other groups probably will. We are in a changing climate, especially in BC, but it's great being in Tahltan territory. They're a very educated and sophisticated group, and we've done what we can to foster a good relationship, and I hope it will continue.
Would any of the KPIs have to change, or any of the when you decide to spend money, would any of those thresholds have to change, whether it's on staff or on just operationally the business or on community relations? Would any of that change? Would you, for example, reward staff for different reasons based on the share price instead of geology, or vice versa?
There's a lot of factors that go into that. You definitely want to retain people, and all those things depend on your cash position, what you think your future cash position will be, how your company does relative to others, but also the progress you're making on the project, running a program safely, like all the above. It's a difficult question to answer, but the key is you do need to retain good talent and treat them well. And exploration is about a team. Like, it is, if one person isn't there, it's not going to work. There's a lot of key people involved.
On the topic of how much money you think you might have, how much money are you going to have when the program is done, which I think it's either coming to an end or it has been ended already? Yeah.
So we'll put out an update about the end of the program next week. With a couple updates on our final holes. Last hole was a longest hole of the program into Hank. I'm pretty excited about that, so we'll be good to provide some context for that. I believe we'll have around $2 million at year's end, and a lot of news flow going through the winter, and we've had warrant money coming in, so I haven't even accounted for that in my math. But yeah, we'll be in a healthy position, and everybody I've talked to here who's a shareholder is really happy with what's happening. We've been able to amass a very large project in a very sought-after district for a low valuation. Yeah. And we've really de-risked it this year and really advanced it. And there's still a lot of news to come, but I'm also really excited for how we will keep going through the years on this project. Hopefully not that many years, though.
How many years?
My goal is a 2 to 3 year kind of time frame to find something very significant, and that's we're in a pretty good direction right now, but part of why we did so much screening across the project is you never know where your best area is going to be. I think our focus is going to be in that Hank Williams area, but there's a lot of other irons in the fire, and things are looking. I'm very pleased with how the program went.
All right, I'm on my way for my last official meeting for the conference. There's going to be lunches and dinners after that. There's a Oktoberfest in Vail, apparently, so I'll go to that. You might see some footage of that, although I doubt it. But before that, I'll be talking to Alan Sabet of Mogotes Metals. They're a $75 million copper explorer co. on the border between Chile and Argentina in the Vicuña district, so close to Filo as well. For people who followed my previous conversations with Alan, you would know that they're about to be drilling sometime soon, hopefully. And does that mean they're going to be spending more money on telling the story while they're drilling, or are they going to be doing something else? Do they need more people, more lobbying? Let's go and find out. All right, Alan, I want to talk to you about spending shareholder capital during bull market specifically, what do you spend it on so that it doesn't get wasted?
Well, the main thing to spend it on is obviously your core activity, which is exploration. You know, it's been 3 years of the market, I would say 2 years at least of the market not rewarding, good exploration work, particularly drilling. Now that the market is rewarding drilling, that's what you got to do. Yeah. You got to go, do the thing that will generate the most value for your shareholders. And I think that's what it is.
When are you going to be drilling?
We're going to start drilling in probably middle of October. Okay. It's possible that it slips because of weather, but that's our plan at the moment.
Are you going to need to take on new staff or pay better salaries to current staff and management so that, during bull markets there might be better paid opportunities elsewhere? So would you have to pay them, give them more money or incentivize them in a different way?
It's not other companies we're competing against. We have a very good culture. We've had our staff for 3 years and they're very strong technically and they know the project well. So we've bolstered the group with some very good exploration geologists and one a senior addition as well to the team to get ready for this moment. The problem with us is more inflation that we have to counteract and exchange rate dynamics. And so we have had to increase a bit of pay in country, but nothing egregious. Yeah.
Would you have to spend more money on marketing? And I know you and I have been talking about that before as well, but now that it's a bull market, everyone's trying to be loud. Are you going to have to spend more money on marketing?
Your favorite topic. So yes, we're spending more money on marketing because the scope of our activities has increased significantly and the size of the company has increased significantly and our budget has increased significantly. Having said that, I'm always high return oriented on marketing spend. So I'm looking for the things that will convey, the pros of our company and what we're doing and will bring something to the company in return rather than just, spending willy-nilly. I'm pretty focused on spending on things that, return money for the company.
What is that ratio going to be or what are you targeting in terms of what goes into the ground versus what goes on G&A and marketing?
Just doing the math quickly, it'll be single-digit percentages. I can't do it right off the top of my head, but a small amount relative to exploration expenditure for sure.
Back to the topic of incentivizing people to work for you. Do you have to change your KPIs during a bull market? Is it that you say like, oh, we need to outperform peers on the stock price? Yeah. That's when you guys get bonuses or something like that, or is it geology related or anything like it?
KPIs vary. I mean, we're an exploration company, so it's difficult to, you do your best, you find the targets and you work systematically, you do scientific work, but a lot of it's up to lady luck and Mother Nature. So we don't hold our geologists accountable for discovery, but we will reward good work post-discovery. Okay. And the way we do that right now is, options that have a strike price that if the company made a discovery was tremendously more valuable, that would have rewarded the team that works on that, right? So, and it also aligns them with the company's outcomes, the shareholders, and there is a little bit of outlay that has to be generally put out for those options. So I like that structure a lot. But individual contributors who do well will be assessed based on their contribution. It varies. It's very difficult in exploration work to individually kind of say who did what. It's a team game, so options is a good one.
Yeah. What about lobbying the government or maybe community relations? If it's a bull market and everyone's starting to wake up and people are starting to spend more money on it, could the government or community request, more engagement or more payments or something like that?
Yeah, certainly. I haven't seen it yet, though. Yeah, maybe next year. Yeah. As the money and the payments. Look, it's highly localized, the question you're asking, so it would depend on the local stakeholders. But so far, I haven't seen it.
Not for you?
Not yet.
Okay. How much money do you have right now?
Personally, very little.
Personally, yeah. What's your net worth?
How much money do you have? Give it to me right now. No, the company has about 25.5 million Canadian dollars in the bank today. Yeah.
No need to raise before we see some assays.
No.
Yeah. Awesome. Well, it's the end of the conference, so I can imagine you're tired. You've been running around, so I'll let you do your thing. But thank you so much for your time.
Thank you so much. Have a great one.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."